Good evening, Mep here, Mep Investments. I want to talk to you about a trade that I did for earnings that went against me, and I want to explain how I keep the dream alive on these trades. If you buy the option, it's pretty hard to. Once you buy the option, you know it's pretty much you're done. That's why I really don't buy options. I only sell them, and when I sell them, I buy them back at my profit. That's the only time I really buy them. So I did an earnings trade in a company called UNFI, United Natural Foods. Pretty big company. Let me put them up over here. NFI, almost $1 billion company. It's held by 83% of mutual funds, institutional investors, 22% short interest. And you can see here the 3-year chart. It used to be like over 40, came down to 10, under 10, and now it came back up. And the trading lower because they reported worse than expected first quarter sales. CFRA maintains a buy opinion on the shares. Um, the earnings per share were 51 against an estimate of 74 cents. Sales were 6.6 out of 6.81 million. So they disappointed, and the stock got hammered today, 15%. Um, is a distributor of natural and organic and specialty products. I could have sworn they owned some. I could have sworn they bought somebody, they merged with somebody. I don't know if it was. I would have to do more research. I'll get back to you on that one. So, anyways, the trade that I did in it was it's here. I did it yesterday, and I sold the 20 put in the money because the stock wasn't at 20. I sold the 20 put and I bought the 15 for $1.80 credit. Um, so what I did today was I made money on the 15 put that I had sold, and I closed it out, and I rolled the 20 put that I had for another credit. So basically, I have a $2 credit on this stock, and my break even is 18 right now. Right now, I'm down in the position, but what I did was I rolled it from, if you look here, from December to January for a credit, and I keep the dream alive in the stock. So my break even's 18 basically right now. So right now I'm down 420 because uh, basically 20 minus 16 is the 420 or so. Um, but you got to take away the credits I collected because I collected credits. I collected the $2. I'm not even gonna count the one that I sold for a little bit of profit. I collected $2. So reality, I'm down 220 because my break even is, let's say, $2. $2 minus 20 is 18. So my break even is 18. So I'll continue to manage this trade. I'll maybe a bounce back. The expected move is $3.23 for the month of January. If not, then I'll look at it again and reevaluate, and then roll again maybe to the next month at 21 days for for another credit, and lower my cost basis from 18. Let's say I can collect another 25 cents or 50 cents, and lower my break even down to 17.50. And that's why I buy options, because I can continue to roll in companies that I think are okay, and just keep lowering my cost basis. If you buy it, you're pretty much done. You're not gonna roll something that's out of the money. Let's say you would have bought um, any option you buy. Any option you buy, you're fighting decay, and if something goes wrong, you're pretty much done. You can't. You're not gonna roll it for another debit. Why are you gonna pay for something that's not good? So here, you're all you're doing is cost averaging. Like if you got a stock and the stock goes down, you buy a little bit more because you like it, and you do average. That's the same pretty much concept. So, but with stocks you could do that because they don't decay. You're not gonna do that with an option that's decaying. These options decay. So that's why you play a decay game, and you play the credit game, and you lower your cost basis. So this is a little trade that I did that went against me. I wanted to share it with you guys. Um, and I'll let you know how it continues to play out as time goes by. And this one's in United Natural Foods today. It was down 15%. Please like, share, comment on the description, and if you have any trades or any ideas, be happy to chime in. Thank you. Good night.